Okay, so for people like us who didn't have money and very recently came into a little bit of money, actual money, most of it is like virtual. Like if I have to buy a house, I have to buy a piece of land, then I have to construct a house. If my company earns 100 rupees profit, I pay 25 rupees corporate tax. I'm left with 75. Promoter of that company, I have to take that money out to then buy a land. I pay dividend distribution tax on the balance 75. Net, I've paid 52, 53 rupees on my profit already as tax before I take out my money. So I'm left with 47 rupees on my 100 rupees of earning. Then I go to a landowner. He will say, I will not take white money. I want some cash component. Then I have to spend 10 rupees to convert my white money into black money and then buy the land. And then I start building a house.
It's an extreme case.
But the taxation
again, you see now another thing is
nobody takes white.
In land, actually now things have changed because the taxation rate itself has become very reasonable. See, there was at once upon a time there was that expectation to get black money, to get cash, but that all has changed drastically. And the more the white economy that you're in, the better it is. You sleep more peacefully. You do business properly.
So, but at some point, because your money, like you said, it's paper, it's virtual. At some point, don't you want to make it like your intangible money tangible?
Yeah.
Because it's honestly, in Bombay, the guys who are buying your 100 crore apartments are all people who made money in stock market.
Exactly.
Private equity guys. So at some point, don't you want to make intangible tangible? Because for me, I'm like, dude, I don't know when the stock market is going to crash.
But I want to make it tangible and transient. I want to make it...
How can you make it transient?
I can buy a gold bond.
Then.
I can buy a gold bond.
Yeah. I mean, the REIT is the best option then, at least for...
Yeah, there it takes care of your liquidity, your transaction costs are quite low.
And you get the benefit of the...
You get a 7% return on a REIT. If you're investing in a REIT, 90% of the income has to be distributed and it's tax paid. And then unfortunately, it's again not tax second time. So you get tax paid money into your hands. So when the REIT structure did come in a few years ago into the country, I thought that was the best reform that ever happened for commercial property. Till then, we were doing strata sales of office. Yeah. And we used to, even today I'm managing about 3,500 customers who have invested in me, with me. And it's like an unstructured REIT. They bought office property only with the intent to get rental income. Of course, they have to go through the whole pain of registration. Paying the stamp duty, paying their property taxes. And then because we manage it as an unstructured REIT, fortunately, they don't have to have that problem of vacancy and brokerage and other things. But that I don't think there's no other company, or maybe, I don't know whether you're doing that in your company, but...
What's strata sale or?
No, not strata sales. But then managing it as an unstructured REIT where you lease it out and then sublease it.
We do asset management also.
And all that, it's very, very few exceptional companies are doing that, and that's a big win. But it's very difficult, very, very difficult to do it. We've stopped doing it now because it's, it's quite difficult to manage people and everything else. But I believe REIT is something that has changed, is to change the landscape of office property. It does three things. One is it keeps your office building intact, keeps it fresh, like how if you walk into any development in anywhere in the world, in either Singapore or Hong Kong or Boston, New York or London, they all, even 20, 30-year-old properties look brand new. Whereas here, after 5 years of you handing over the property, they've deteriorated because of the infighting within the society. The management is not there. So REIT does help. And I believe if REIT is worked out well, there'll be many, many office properties, parks that will look brand new even after 30 years of their getting ready.
You guys have a REIT.
They do have.
Yeah.
But it's not really taken off at scale in India, right? REITs?
There are three REITs.
There are three REITs now. I think that the education, of these buyers and everyone of why the REIT is the more efficient vehicle rather than still owning and saying, this is my office floor, I own this floor over here, is just starting to happen. And also a lot of the mutual funds and all of that also now putting in money into that directly. So
It's more,
if you've seen the last...
It's more institutional than retail, right?
Yeah, everybody,
That's why
we've seen
it's
the
not
last...
Hardly any retail.
Yeah, so it's not very...
Because the investors have really not realized the potential of the REIT.
That is not happening. It's happening now. If you see
Tell
the
us
last
now,
3-4 years.
educate now. Why are REITs good?
So I think everything that Uncle just said, which is you get a tax dividend income, constantly. You have the ability to diversify your risk across like a much larger portfolio and not have any vacancy risk that you might have if you own like a single property or, a tenant paying that. You have a professional management team that is, managing it, making sure that the asset value of the portfolio continues to increase. It's growing also because they have to also, continuously buy and acquire new quality assets. If you've invested in a quality REIT, you know that the type of assets coming in also have been vetted and are actually in the marquee locations that will continuously like grow. So I think it's like removing that entire murkiness, entire amount of like stamp duty, things like that, all the taxation that comes with it, and the hassle of having to manage it yourself if you're not from the real estate space. You just, buy that and you can enter as low as whatever it is, right? I think it's like $1,000.
15,000 or something.
Yeah, 10,000 bucks.
So if I buy the Embassy REIT, I'll make 7%
and the stock appreciation, right, that it might have, which as a REIT, it's not going to be. It's more of like a steady annuity type of income. But India will see higher appreciation, I would say, than foreign REITs or like, the US REITs and things like that. So...
And what do you think about fractional real estate?
It's the same. I would say that a REIT is fractional.
It's like an unstructured way. But you see, there's one more advantage, which Karan hasn't told you. For a developer, we need to churn capital. Now, if I have a certain amount of critical mass of office real estate or retail real estate, I take it into a REIT. Now, I become the manager of that REIT. Like you're the manager of the REIT, that means you're getting a certain fee for managing. I need not be the owner. Instead of fractionally selling my space to 100 people, what I do is I can sell a certain equity, a certain percentage of that to the public or to the institutions. And as and when I need more and more liquidity, like in a listed company, I can keep selling my units. I get my liquidity. If I don't want the liquidity, I keep it. So that, for a developer, it's a big advantage as a REIT.
It's
For a developer, it's like a natural
It's
exit.
a vehicle.
It's
It's
like
a
an exit
vehicle for exiting.
right?
So like you also have exited.
Yeah, we develop
the
in one arm
the
and then
REIT is under
exit.
your name.
Correct.
See, you're the manager still. So whatever happens, you're still getting a certain
fee
for it.
Yeah.
So it has a dual advantage. Now, fractional ownership, if there was no REIT, that was the only way if anybody could participate in commercial real estate. But I would say with the REIT in place, this fractional ownership is very difficult to manage. You see, we as a company have sold undivided share of
He's like the
floor.
originator of fractional
Yeah, but
ownership.
then
Now it's called
that's
fractional
very
ownership.
difficult because what happens is one generation changes, another, there's a newer buyer. For the first guy who you sold to, you have a relationship. The second guy need not know you. He would have bought at a much higher price. His expectation on
and it's
return
quite
is different.
unregulated right now.
Very
So
unregulated, very difficult. See, people
So you make a
management...
JV for each property?
Not
That's
JV.
what these guys are doing.
Yeah, no, it's not a JV. When you're selling to multiple people. Then what happens is, since everybody has bought it with the intent of leasing out, you are again leasing it back from them and releasing it to the end user. So we make a sort of a arbitrage on that. But what we do is we manage the whole system. We manage the system in terms of making sure there are no vacancies. If there's a vacancy, we make sure that we fill up the space almost immediately. And if there's a hit, we take the hit. So what happens to our original investor is they are very comfortable. Listen, I invested X, I'm getting so much, and my money is growing. And then whenever I want to sell, obviously property value has gone up and I get some return on capital also, apart from getting the monthly income. So it's a win-win for them. It's only, again, it's a huge amount of managing people. if you have the right mix of customers, right mix of people, it goes on smoothly, goes on well. Like during COVID, there were many vacancies. My finance guys came and told me, sir, we are not getting any rent, there are vacancies. What do we do to all these outflow that you have? I said, keep paying. Moment you stop paying, there'll be panic because the people who have invested are actually invested. I know for a fact that some are only living on that. Their livelihood is running on that. Moment you stop the flow, there'll be such a big panic. Each one is going to come and create a scene, and they'll be really in sort of panic mode. As it is, there's panic going on for lives, and this panic will go on for money. I said, keep paying. So it was a little hole on the pocket. But then when things became better, rents became better. So I had to tell, listen, we took the hit. So now you can't expect the market rent. And for us, so we have to make up that deficit somehow or the other. People understand that. So it's a healthy relationship. But I think in the long term, best is to do a REIT structure, educate people like Karan said, and allow them to invest in the REIT instead of institutions. Get the retail investors into it. It'll be a win-win. In fact, your REIT value will be much higher.
Like Strata is a fractional real estate
Yeah,
company,
fractional.
right? There's some regulation that has come out that allows
No.
No. So SEBI has come up with a small and medium-sized REIT, and I think it's to get, because fractional ownership guys are still in the so-called unregulated space.
They were in the SEBI
It's
sandbox.
like
right?
SME
Yeah, so they
IPO.
want
It's
to
like
get
SME
these guys
IPO
as a small and into the SEBI regulation so that they can now monitor and have similar structuring. Like, you know, the sponsor cannot be the same as the manager in terms of facility managing the property. 90% of the asset has to be leased. All that structuring is going to come through, which wasn't there for a fractional ownership REIT.
Would you bet on that business model today? Because then I can pick, I want a part of UB City
Yeah.
versus a REIT which has many properties.
Yeah, it'll be single
I wouldn't, because you're
property
still
based.
then limited to one asset versus in an actual REIT. You know, I'm distributed across
It's a bit
geographies.
like buying a mutual fund and buying a stock.
It's
Yeah,
I mean,
obviously.
to some extent. Yeah.
Very nicely analyzed.
Some people might want to buy stocks.
Only, I
That's
like this
same as
talk.
Strata then, right? Then you might as well just go, if you like a
But
certain
I
building.
can't buy the entire company of which I'm buying one share.
Yeah, but what I'm saying is, but if you like that particular
It's
building,
not,
but yeah, you're talking about
it's like,
units.
would you invest in like a much smaller business, or would you invest in like, you know, a large diversified business? I think it's less
He's
about
analyzed it, no, mutual fund versus a
Risk
particular
reward
stock.
ratio. If I'm so confident that the price in UB City will go up 80%, whereas Bangalore commercial will go up 20%, then maybe I want to take a punt on UB City.
Possible.
maybe.